All right, and then our last report we're going to prepare is our budget income statement. And this is why we did all those supporting budgets, so that we would know what to put down for our budget income statement. So the first thing we're going to start off with is sales, and this is an absorption or full costing format for our income statement. So sales for the first 6 months, we were expecting to sell. If we go back to our sales budget, was $5,670,000. So that's our first number. Then we're going to do our cost of goods sold. Now to do our cost of goods sold, we're going to have to figure out how much does it cost for one unit. So we're going to do a supporting schedule, and that's going to include the direct material, direct labor, and our manufacturing overhead, and this will be our total cost of goods sold for one bag of basic 2. Was it? Yeah, basic 2. And here we're going to have our direct materials. We have crop and we have dirt. So for our crop, it was 5 pounds, and that was from the problem. And it was, I think, what, $3.80, if I'm not mistaken. So $5 here, not $5, 5 pounds, and then $3.80. Where's it? $3? Oh, there you go. And we got our dirt was what, 10 pounds at $1.50 a piece, I think it was. I don't remember. So long ago. $10. And then we'll have our $1.50 for the price per pound. And then we'll just multiply it out. So we're going to figure out the cost for one bag of basic 2. So $19 for the crop, $15 for the dirt. Direct labor, if we recall, I'm just going to go ahead and punch it in, $4.25, because I remember that. And then the unit cost was $12 per hour. So you multiply that out, 12 times a quarter of an hour ends up being $3 for direct labor. And then it says manufacturing overhead cost is 100% of direct labor cost. So 100% is 1 times whatever we have for the direct labor. So it's actually the same. And then we'll add it all up together. So it equals SUM, sum function. And we're going to highlight the range of sales. So one bag of basic 2 costs us $40. So what that means is we're going to take the $40 and multiply it by the number of units sold. So we'll go back to our sales budget, and let's see how many units were actually sold. And our sales ends up being, what, 90,000? So $40 times the 90,000, that gives us $360. So we'll take our sales minus our cost of goods sold to get our gross profit, also known as gross margin. So the dollar amount minus the cost of goods sold, so that's $2,070,000. Then we will subtract out our selling and admin costs, expenses for the period, and these are period costs. So we'll just go to the budget. Where's the budget at? Our selling admin budget. Oh, right there, past it. $867,000. And we will take the difference. That'll be our income from operations. So we're going to do the math. So $2,070,000 minus $867,000. That gives us $1,203,000. And then we're going to figure out what our income tax is. This is our income tax expense. And per the problem, I think it's at 30%. So let's see what it says up here, just so you can see it on your problem. It says right here in item 6 that it's 30%. So we're going to do 30% times. So we'll do 30%, multiply it by the income from operations. So that's F24. Multiply it by so 1,203,000, and we get a total income tax of $360,900. And then our final number, net income, will be the 1,203,000 minus the income tax of $360,900. So our final number, this is our final number, $842,100, and we are done. If you have any questions, you can post it in Google Hangout. That concludes problem 23-1B.